Hey, good day, everybody. This is Dennis Wilborn, the Active Trend Trader. I want to welcome you to this new feature from Active Trend Trading, which is basically midweek market course correction. As an old sailor, one of the things that is very important, we would want to take our bearings every once in a while to make sure that we were still on the proper course. We check in with everybody at the beginning of the week, end of the week, and this is basically going to be a check-in for midweek free service from Active Trend Trading. What I want to do is basically make this a techno-babble free zone. Well, what does that mean? I have talked to many of the members who kind of join us in the middle of a session. Some of them may have, or may, a lot of them don't have any idea when it comes to the concept of technical analysis. And so you get talking about moving average and Fibonacci's and all this kind of neat techno-babble stuff. And they go, what in the world does that mean? And wow, this is too complicated. I don't get involved. I don't want to get involved in trading my own accounts. And so what I'm going to try to do with this is basically keep it very simple. As a technical analyst who's studied technical analysis for many years, almost have a master's level education in doing technical analysis. I want to take my knowledge and then basically translate that from the charts into something that's easy to understand for folks just first checking out what's going on with technical analysis and what's going on with active trend trading. So if I can make it simple to understand for those who are, it'll make me be able to communicate much better. Hey, real quick thing I want to highlight to everybody, just be careful with moving averages. We get a lot of noise going on between tweets from the presidents, tariff news, trade wars, and all that kind of stuff that, oh my gosh, the bull market is coming to a close. And it may very well be. The market's going to do what the market wants to do. However, be aware that since 1930, there have been approximately 1, 2, 3, 4, 5, 6, 7, 8, 9. We're currently in the 9th bull market. The average bull market lasts 9 years. And so when people see that, they point and say, well, 9 years, that means this bull market's been going on now for almost 10 years. Therefore, it's coming to a close. Be aware, half of the bull markets lasted anywhere from 3.7 years up to about 6.4 years. But if a bull market made it past 6.4 years, it would tend to last somewhere around anywhere from about 13 years all the way up to 15 years. We are currently in the 10th year of it. And so if the true average on the bull markets that make it past 6.4 years, we may have 2 or 3 years left in this bull market. But again, market's going to do what the market wants to do. So something fun to be aware of. Second thing to be aware of is I found this old chart. I just share it with you really quick. This goes back to 1797. So it's the Dow Jones and or the Dow Jones equivalent. Doesn't the price action back here in the 1700s look a lot like the price action we see today? Certainly does. Why is it? Because price charts reflect all the psychological, emotional baggage that the people trading that market carry into it. In other words, the greed, the fear, all those things, the planning, the expectations all go into driving the price of the indexes. And it was just as relevant 300 plus years ago as it is today in today's market. So let's get in. Let's take a look at the indexes. Hey, visit our website. You can basically, we've got some free stuff for you over there. Sign up for our free newsletter. And also we've got a really great report. And you'll get notified when we're doing these crazy little updates. So taking a look at the indexes. I want to take a look first at the weekly chart on the spiders. And we can also take a look and I'll throw this up really quickly. I'm not going to leave it up there, but we're also coming to the end of the month. So over the weekend, I will be taking a look at as you can see, price has been on a nice uptrend. As we said, this bull market has been going on for about 10 years. It is at the top of a range. This formation that you see up here is called a megaphone top. We are testing the upper boundaries of that. In other words, this is like the roof line. And when prices get up close to the roof line, they tend to fall back down. It has done that. We have now come down to the first floor below the roof. In other words, we're up in the attic. We break through this level here at 281. We are going to most likely visit the next floor down, which is about 274. So just look at those. They're kind of like floors of a house. Projecting downward, yeah, we could get a move all the way down to the bottom level here. This is the basement level on that megaphone top, which is about $214 on the S&P, which equates on the spiders, which equates to about 2,100 on the S&P index. Currently, what we've been seeing, though, is price action over the last, since the, right here, since the beginning of August, we've been moving sideways. So here's our floor, 282. Here's the ceiling to the room, or the current floor we're on, up here about 293. And we also like to refer to this kind of sideways movement as being the kind of like the meat grinder. A lot of people lose money in this time of formation where the prices go up, fall down, go up, fall down, because they will try to buy it up here like they would normally buy if it's going up, in an upward trending market like that. They'll try to buy up here, market reverses down. So when the market is in the process of shifting, now we may be shifting into a further downside market, but when it's in the process of shifting, we need to shift and change the way we try to trade the market. With the active trend trading, we have a lot of tools to allow you to do that. But right now, I would be looking at buying down here at about 282, selling up here at 293, and then repeat that over and over again. If you know how to trade stocks to the downside, and if you're questioning what that means, don't do it yet. Okay, if you're questioning what to the downside, not to the dark side, so I'm trading to the dark side. No, that isn't what that is. So that's it for the spiders. Here we are for the NASDAQ, and I use the Qs, which is an ETF that represents the NASDAQ. As you can see, we're in a similar type situation, trading sideways, and it's moving down to price actions about the 181 level up to about the 189 level. And so we want to plan our trades around buy down here towards the floor, sell up here towards the ceiling. One of the things that people can learn how to do is you can basically plan to trade around this level here, sell it before it gets all the way to the top. In other words, look to sell it when it gets back to that yellow line, which in this case, that yellow line is just a moving average, and that represents that golden line represents an average of the last 50 days price action in the market. So as you can see, NASDAQ stuck in a range down here, 182 to 180, up to 188. The expectation is if we break out the top of the roof, we're probably, or up of the ceiling, we're probably going all the way back up to the top of the roof and or higher. But we've got a lot, the market has a lot of stuff to get over. And last but not least, the Russell. The Russell index, what the Russell index is it is basically an index of small cap type stocks, very sensitive to interest rate issues. And so we should see the Russell tend to rally if interest rates are going down. However, the Russell, the small caps can also be very, very sensitive to what's going on globally. So there's some we could be considering kind of scary stuff going on globally. And as long as we shift into the proper, basically, bias towards the market, we'll be okay. But as you can see, the Russell, and I wanted to highlight this floor on the Russell right here at about the 145 level, this is IWM, represents the Russell, has been in place now all the way going back actually to the first part of 2018. We broke down below it once, fell to this level. If we break down below it again, we could target 136.45 or down here to the ultimate basement of about 130 to 128, or all the way down to this downtrending line, which makes up its megaphone top. So that's all I have for today. I'm watching this is getting close to potentially being in a buy zone. It's good that price action moved back above these lower levels. That's a positive. But if we get if price action closes below, I would say closes below today's candlestick or this level, if daily prices close below that, that will set us up for a larger fall down to that next strong support level, which is at about 136. So if you're looking for different ways to be able to learn about this, be able to trade it, hey, join us on as an active trend trading premium member, and we'll help you understand, and also you can parallel trade with us to take advantage of whichever way the market's going. So again, let me know how you appreciate this or enjoy this particular venue. And if you don't subscribe to our Market Tech Talk YouTube channel, just go down, find that little red subscribe button, click on it, and you'll be subscribed and you'll get notification when we post new content. So until later, aloha, God bless everybody.